Australian retail turnover jumped 0.3% in February, thanks in part to Taylor Swift. The ABS said the 7 sold-out Taylor Swift concerts in Sydney and Melbourne lifted retail spending to $35.9 billion, with more than 600,000 Swifties spending money on clothing, merchandise, accessories and dining out. Joining me now is Johannes, Faul, Director of Equity Research at Morningstar. Johannes, thanks for your time. Look, let's start with these numbers today. Slight lift in spending due to Taylor Swift, but when you take her concerts out, the overall trend in retail spending seems to be pretty flat.
Yeah, hi, thanks for having me. That's true. Retail is still a bit on its knees, retail spending growth, and we expect that to continue for a few months more. But there's good news for retailers out there in the sense that we expect retail sales growth to pick up going to the next fiscal year and remain at higher levels going forward. So this is the trough in terms of growth that we're seeing at the moment.
Yeah, this week you put out a report on Aussie retail. We know there are tax cuts coming on the 1st of July, potential for interest rates to start falling later this year as well. Is that going to turbocharge retail spending?
It is to a degree, but not anything like what we've seen during the pandemic with those really high retail growth figures that we saw when inflation was very high, rampant, and there was pent-up demand coming out of the pandemic. So we're not going back to those bonanza-type days. But as you say, like the tax cuts are going to have an impact, as well as interest rate cuts, hopefully. Everybody's hoping for that. The biggest driver, however, will be wages growth, increasing wages, and also more people being employed.
Obviously, inflation's been a big challenge the last few years. RBA's lifted rates aggressively. It's still continuing to remain above 3% inflation. Are you seeing reports at all of retailers continuing to lift their prices as well?
Well, if anything, and I think the supermarkets have been most prolific at the moment, inflation is easing, and the ABS says the same thing as the supermarkets say, and that is inflation is easing for our food prices, which is, again, good news for the consumers. When I think about top-line growth, obviously, having not as much inflation, you don't have that sales driver anymore to that extent.
Yeah, we've got a chart on the screen here showing retail sales growth has actually gone below the level of inflation in the economy. Is that a significant economic event there?
Well, what it means is that people are buying less, so volumes are negative on aggregate within the retailing sector, and that is significant. So we expect that to turn around and start growing again. But as I say, we're coming from levels where there has been a big push into retail. People have been saving less to maintain their lifestyles. And right now, at the moment, we're just seeing that pullback. And you saw today in the numbers where in the last month of Feb, we saw that retail sales were just up barely 2% on the prior year.
Yeah, you mentioned savings. We know household savings ratio really picked up during the pandemic.
Yes.
It's now on the way back down. But that saved money that people are spending, is that going towards mortgages or is it going to the retail sector? Is the retail sector getting a bit of that?
Well, I would expect that boosts all consumer spending. This drawdown of those savings, as I said, to maintain living standards, your lifestyle. So the savings rate has come down, is now below where we see the long-term average. So that's the big unknown, the wild card, if you like. What's going to happen with the savings rate as wages go up? Will people spend that, or will they start saving a bit more? In some places like Germany, we've seen people saving a bit more now, the savings rate creeping up. The question is going to be, is that going to happen here, and in how far is that going to happen here? But we're still below, so that might be a headwind for retail spending.
Now, we've got some stock picks from the report we can put up on the screen. What jumps out at me, Domino's Pizza and Collins Foods. So is it because consumers want to spend less money to pay for food? Are they trading down for products that gives those companies a bit of growth? Positivity?
Well, we think that's exactly what's going to underpin some of the sales going forward in this environment, that consumers will go to a fast food restaurant.
Accent and Kogan as well.
Accent and Kogan as well. we find they're both still attractively valued. And if we think about the whole discretionary sector, it's run very hard on those expectations, tax cuts, potential interest rate cuts. And we believe that a lot of that might be overblown a bit, but there's still those pockets of value, and that's part of it. Domino's or also Accent, we see value.
When are you expecting rates to start coming down, interest rates in Australia?
Well, at Morningstar, we don't forecast that. Obviously, the market is telling us something with the futures rates that it's going to be end of the year. Mm-hmm. But if interest rate cuts come through in fiscal 2025, that should be a kicker for retail sales for sure.
And overall, is the retail sector holding up pretty well, or is it struggling a bit with where we're sitting at the moment in the economy?
Well, right now, and we saw the numbers today, it is struggling a bit. There's still growth, but consumers have pulled back on spending. But as I said earlier, with the tax cuts coming, potential interest rate cuts, we'll see that growth picking up again heading into the next year.
Because the stock market's obviously at a record high. So can prices keep going up and up and up? That's
the question: is how much of this is priced in? On average, we would say, especially the discretionary sector, looks quite ritzy. So the market has baked this in, all this good news, and perhaps being a bit optimistic on some of the growth ahead.
Johannes, thanks very much. We're out of time.
Great. Thanks, Ed.